Yeah, thank you for having me back in this video. My name is Steven. Now, in this video, we shall be considering what I refer to commodity trading. What are the difference between trading commodity and conventional currency trading? Now, to me, there are a lot of differences in trading commodity and currency. Now, without further ado, let's itemize the differences in trading commodity and that of currency. Now, for over time and with my experience in trading, one of the things that I consider most while trading, especially gold and crude oil, is the key area, that is the key level, the support area. How is the price reacting to this very key level? What are the reasons why they are responding to key levels? So over time, I've seen that trading with key level creates a lot of volatility when trading the commodity. Let's take for example from this chart. I am on gold chart from here. Look at this chart from here. You will agree with me that I have different way of identifying key area. Like from here, I have what I refer to as pivot level, and it segments the market into support 1, support 2, support 3, and at the top of the pivot line, I have what we refer to as resistance 1, resistance 2 to resistance 3. Now, how do I utilize these particular levels to be able to take my trade, especially when trading gold and crude oil? If you look at this chart, you will agree with me that when prices move from this very area and it approach this key level, which is support 2 from here, the market did what? The prices store around that area. Now, while trading, I always take into cognizance my key area, that is the support area, while trading, especially the gold. Now, if you look at this line, this very trend line from here, that is to tell you that when prices approach this area, price of gold will store around that area. So while taking gold, I always take into account my trend line, my support line, and also all the key levels. What are the key levels? The key levels are the support line, the key levels are also the resistance line and the trend line while trading. Now, I never joke with all this when I'm trading, especially the gold. Now, let's look at the 15-minute chart from here. Now, I'm trying to compress the chart. Now, from here now, you will agree with me when prices move from here. Look at when it moved. When it got to this support 1, what do we have from here? It holds the market. It holds the price. The price store around that area. So that is to tell you that when you are trading gold, you should always take into account major key levels. Now, once you have identified this key level, whether by using your pivot level or by using your Fibonacci level, this will eventually assist you. If you refer to my trading on using Fibonacci level, you will see how Fibonacci levels are being plotted using different settings. Now, if I come in from here, let's assume that I take my trade from this place because I'm on 15-minute chart now. Now, as soon as the price starts from this vertical line that I'm having from here, now what I'll be looking for is how price is reacting on my support. That is, what are the supports that is on this very support area. I'll be looking to how price is taking their clue. What are their reaction once they got to that area? Then I will also trace back to a bigger time frame, like 4 hours, daily chart, and weekly. What level do I have at that area? Now, because of the volatilities of gold, because most of the time when gold move to support area or move to resistance area, we always get an erratic or a kind of quick reaction to that area. So when my prices is approaching that area, I often do what? I often exercise a lot of patience at that point. Let's see what happened in our daily chart. Now, if you look at this daily chart from here, look at it from here. You will agree with me that at every support level, the prices make a lot of adjustments. If you look at this place from now, from here, let me draw the line from here. Look at it from here. Now, this is support 3. This support 3 is an area that the market are doing what? Are finding their resistance. Are finding their support to move forward. Now, if you look at this place from here, you will see that once the price approach support 3, what do we have from here? We have an engulfing pattern. So that is to tell you that most of the time, commodity reacts to what? To support and resistance. Because I've been watching this for over time, and I've seen that once you are able to identify major key area in trading, especially the gold and crude oil, you always get a very serious reaction. Look at this place now. Once they come to this place, look at what happened from here. We could see that there is an engulfing pattern. And now, as long as we get an engulfing pattern in a bigger time frame, what do we need to do? We need to move to a shorter time frame to look for another key area that the price are possibly going to do what? Going to store. Now let's move down to 4 hours. Now if you look at this 4 hours down, this is the line that I drew from a bigger time frame, which is probably from my daily chart. This line was drawn, and look at what happened from here. At every key area, that is at every key support area, what do we have? Now if you look at this price, when after the engulfing pattern, once the price approach support 2 from here, we have what? We also have a retracement coming what? After the support 2, it got to support 2, it moved to support 1. Once it got to support 1, we have what I refer to as retracement of the price from support 1. Now, you cannot trade gold without taking into cognizance or without taking proper look into the key area. Now, if you look at this area, now if I'm drawing this very area that is here, that is from here, let me draw a kind of horizontal line for us to be able to know that what I'm referring to as key area. Now let's take it from here. Now this very particular area has been repelling the price from here. Now look at this place. Now from this line, from these balls that I've drawn from here, you will agree with me that once the price move from this engulfing pattern, it moved from here and it got to this place, we begin to have series of consolidation around here. This consolidation does not happen ordinarily. It happens as a result of what? As a result of key level. Now if you move back to this place, now how do you get your key level? Your key level is a previous reaction, that is where you have the bears and the bulls negotiating in the markets previously, and when price moves to that area, you are still going to get the same reaction. Look at what happened from here. If you look at this place from here, you will agree with me that prices has been moving from here. It has been taking crude from here and from here, and once they come back again, what do we have again? We have the same reaction from here, and the same thing also happened from here. Now these are what I refer to as key levels. These are what I call key levels. And why trading, especially commodity like gold and crude oil, once the price approach all this area, you have to take them into cognizance, and that is what exactly make it different to currency trading. That is the difference between commodity and currency trading, because most of the time commodity reacts to major key level. Now let's put down to 1 hour. Now here are the balls. Here is the balls that I drew from 1 hour. Look at it from here. Look at the balls that I draw from 4 hours. Now once the price approach this area, are you seeing that now? Now in 1 hour, I'm able to see the what? I'm able to see the 240 moving average. How prices are moving along the 240 moving average. Look at what happened from here. Are you seeing this from here? Once the price first of all move, they test the 240 moving average. Most of the time, especially when the prices of gold are moving, they always find what? They always find major area in 240 moving average, either to stop or to turn back. They would rather stop at that area and do what? And come back. These are pronounced to using 240 moving average as an entry. Now, if I'm taking out this now so that you can see it very clearly. Now, let's take it out from here so that we can see the chart very clearly. Now, if you look at it from here, once it moved from this place, once the prices move from this place, it got to this area. What do we have from here? We have prices doing what? Making a series of what? A series of turning back. And this actually worked for possibly for 10 hours. If you look at it from here, once it got here, it took the move the following day to come back again and start doing what? And start retracing back. Why does this happen? Because especially prices of gold or crude oil or possibly commodity always react to key levels. They often react to key level. Are you getting what I'm saying now? They react to key level. Now let's see how the prices move again. Now, another point that we need to stress here is that as soon as the key levels are broken, we always have what? We always have a very heavy reaction. What do I mean by break? How do I identify my own break while trading? Now, this is what I do to identify a concrete breaking. Now, if you look at this 240 moving average from here, you will agree with me that this very price that is here, that is this very price that is here, this price that goes up from here, eventually break this 240 moving average line. Now, I am not relying on this candle alone. I want to see what will be the reaction of the coming candle that will form. Now, if the coming candle was unable to come back to this 240 moving average, that is to tell you that this is a very solid break from here. And from here, we need to start doing what? We need to start looking for an entry after this very candle. We have to start looking for an entry, and this candle give us an entry after the break. Then we ride it up to this side. Now, you will agree with me. As soon as the price approach resistance 1, that is, it's moving from resistance 1, that's what we call what? A retracement of the price. That is why when I am trading the gold, the commodity trading, I always take into cognizance the resistance level. Now, you will agree with me that on Friday, when the market approached resistance 1 from this very top here, what do we have? We have what we refer to a retracement. That is, we have a coming back of the price to retest the 240 moving average, and that's exactly what happened from here. If you look at it from here, once it moves, it comes back to retest. Why does it come back? The reason why it comes back is that at this very support resistance level that we have here, if I'm drawing my horizontal line, let's draw an horizontal line to see where this key level is taking its clue from here. Let me move back from here and see where. Very good. If you come to this place now, you agree with me that this is the red line that I've drawn from here, from previously, and this red line is corresponding to this place. So that is to tell you that the information that we have for that retracement in last time, they are taking their information from this very area. So if you move down to this area now, you discover that the prices of gold is taking information from this area. That is, previously the price of gold was priced around this area. It was priced around this area. Now, why does it have to react? Because they are commodity. Because they are what? There are forces of supply and demand at that area. And because of this, there are negotiations going on. Because of this negotiation that is going on, that is why you see that when prices go to that area, they begin to have series of what? Series of decision in going up or in coming down. Now let's go back again to where we were before. Now if you look at this place now, you will agree with me that this red line that I've drawn here, I've got an information that what happened at that place is as a result of a previous negotiation, and the same thing also rehearsed at this place. No, while you are trading, now when you are trading the commodity, you must always take into cognizance the key area, the key levels. You cannot trade gold or any other commodity without taking into cognizance or without taking into account major key area. That will never happen. If we rely on technical analysis alone, it will not work. The other thing that makes commodity very unique, especially the crude oil and gold, is that most of the time they react to what? They react to fundamental news, especially the gold news that are coming up from New York section, especially the New York section, where we have any news that is coming out, especially the commodity information that are coming out. Once all these data are being released from the New York to the market, you always see a very serious spark. Are you getting that now? Especially when you look at this is as a result of news that make this very area to be broken. And once they are broken, we also have another news that bring in an extension to this place. So we must always take into consideration the fundamental analysis of what? Of other news that are coming out from every market zones, from every section. This must be taken into consideration. Now let's see how we have this in 15 minutes. Now look at the reaction in 15 minutes. If you look at the trend line, these are trend line. These are trend line. This trend line is signifying 15 minutes or is signifying 1 hour support from here. If you look at it from here, once the prices move from here, once they go to this trend line, what do we have? We have a retracement. We continue to have this trend line challenging this area. So as this area is being challenged, what do we have again? We continue to look for an entry from a break of this area. Once we get an entry from here, then we are looking to do what? We are looking to exit at resistance level, which is this trend line that is up. You will agree with me that this trend line has been drawn in it has been there before the price got to that place. And once the prices are moving to that place, we must take into account what actually happened on those trend lines. Are you getting the point now? We must take into account what actually happened on those trend lines. Now, once prices approach this trend line, what do we have? We have to take whatever the market has given us and do what? And look at the reaction of prices on that trend line. Now, because we are 1 minute trader, we continue to take into cognizance every aspect of the trend line, of the support that is happening. So the moral of this lesson is that when you are trading commodity trading, gold or crude oil, you must always take into cognizance what I refer to as key level. Key level play major important role in trading commodity, especially the gold and the crude oil. So I believe with this information, you'll be able to appreciate how to identify key level. Then you must refer to my video on Fibonacci levels for you to be able to get how I use my Fibonacci level to identify key level. So I believe with constant practice, you'll be able to understand how to trade commodity. You must learn how to trade particular instrument adequately and base your trading on this for you to leverage on the market. So I wish you good luck while trading, and I say thank you as you trade ahead in this week.